Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Nice to have you back with us. Thanks for tuning in to our Real Estate Radio Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from our Wilson Investment Properties headquarters in Silicon Valley. I'm Tom K. Wilson, your host for this weekly program on real estate investing. If you can't make the live show, you can catch our podcast on TomWilsonProperties.com or on iTunes or on YouTube. Just put in Tom K. Wilson and it will pull it up. About 6 years worth of broadcast podcast with a lot of wonderful guests that I get to ask my favorite questions and learn so much along with you that I'm just delighted to share with you the information from these folks that have so much experience. You can also go to TomWilsonProperties.com, sign up for our weekly newsletter. It tells you a lot about, summarizing a lot about what's going on in the world of real estate and the world of economics, which we've learned is pretty important to stay in tune with to help us make better buy-sell decisions in our real estate indeed. And there's a lot of investor education information on that site, and we always welcome your questions and suggestions. So today we have Gena Lofton, whom I've had the pleasure of knowing for some time through Real Estate Guys Summit at Sea, and she is has an MBA and bachelor's in pre-law finance. Gena is an active investor across multiple asset classes, internationally recognized speaker, author, media expert, conference contributor, and she's author of Escape the Madness, the 10 Steps to Get Out of the Rat Race, CEO of Passive Income Advisors, and host of the Gena Lofton Show. And Gena, welcome and thank you for being on our program.
Well, thank you, Tom. Thanks for having me, and thank you for providing so much valuable insight on real estate and economics to the global investing community.
Thank you. They tell me my passion comes across. It's easy to talk about and share about things that you love so much.
Yep, definitely, and I love that you make sure to bring in economics, because that is very important, and so many people miss the economics aspect, which is the foundation for all investors, in my opinion, and many of them just look at the real estate and forget about that most important, vital part.
Well, we certainly got shaken a little bit here on this last crash and recovery, and so that kind of emphasized, I think, that how more closely linked economics are and and different cycles. I think one of the most common things I get asked are, what do you think about the market? And I say, which market? The market is thousands of submarkets, but yes, you got to start at the upper level. So Gena, tell us your story. How'd you become financially free, and how'd you get started in real estate investing?
Yeah, so I became financially free, probably about 10 years ago or so, and it was through real estate. And I was, I worked in corporate America, had a very successful career, and most recently, or the last corporate role, had been building another asset called DIRECTV, which you might have heard of, which was the largest pay TV company in the world, as a matter of fact. So between building that asset, and we sold it to AT&T in 2015, and I, during the same time, acquired over 4,000 apartment units over the last 10 years when the market collapsed, because of my understanding of economics. And it was just a great time to begin buying deals. And I actually just started buying small apartment buildings in Inglewood, California. And I only do value-added real estate, I was a foster kid while I was growing up in South Central Los Angeles. My parents were unable to take care of any of their kids, and as a result of that, we were living on the street. So I didn't want to become homeless. As an adult, I didn't want to depend on anyone for my financial well-being, whether that's a job or the government or a husband or kids or God knows whatever else that people do depend on. I said, no, I want to make sure that I have sufficient passive income to exceed my expenses. And I didn't know what that meant, Tom, to be quite honest with you. I did it the way that people were taught to do it. You go to school, you get a job, and then you invest in a well-diversified portfolio of stocks, bonds, and mutual funds, blah, 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 blah. And, back, 15 so years ago, I read that little purple book called Rich Dad, Poor Dad. I always had an affinity to real estate, just because if you're homeless, the most logical thing that you can do is to own the land. That way you can prevent yourself from being homeless. It was more of a, it was literally that stupid, right? If I'm exposed to being homeless, then why not own the property, not knowing much else. Anyway, so I read the little purple book, and at the time I was working for a company called Ernst & Young, Management Consulting, another, amazing firm, and doing all that global stuff and helping companies around the world make more money, and had an amazing career there. But I only had like
Gena,
one
if I may interrupt for a second, even though you're kind of starting from scratch and didn't have a role models there. And you mentioned about the traditional path of getting an education, but you did go down that path and got education, and what stimulated that, and what and would you agree that provided a good stepping stone for you?
Yeah, I would agree with that, but I would agree, and it was I'm a Gen Xer. I'm not Gen Y, I'm not a millennial. So during that time, this was the 90s, 80s, 90s, that was the path that we were kind of taught to do. And, I went to school. School was a lot less expensive at that time. I mean, I got my undergrad degree at Cal State Northridge, and I got grants to finance my education, and I worked throughout undergrad and grad school. So it was a very different era, and it did give me that kind of entry ticket into a great role in corporate America, right?
Yeah, you can do it without that, but it sure is it's nice to have a ticket to get on the train, so you don't have to climb on top, right?
Exactly. Yep, it was a great ticket. Today, I don't know if the return on the investment is as equal as it was at that time, just because the cost of that ticket is so much greater. So I see these young people coming out of college today with, student loans of like $100,000. I mean, if you think about the student loan crisis in America, that's the largest, asset, so to speak, on our United States government's balance sheet, $1.5 trillion and a 20% delinquency rate. I don't know if the return on that investment is as good as it was when I attended university and it was free, basically.
My thought about that is that it's you can spend that much, but you can get a good foundation and experience without spending that much, right? I've go back even more than you. In my 5 years in engineering school in the late 60s cost me $5,000 total. Not including room and board, but yeah.
Yep.
Amazing. So now they can spend $150,000.
And if you could get some type of education, and it may or may not be, in the formal traditional sense, but I am an advocate of education and learning. It just may not be in the traditional sense of, going to college or, 4-year university and getting into debt to do that. But education is really, really important. I mean, things are so much different today, Tom. Like, the internet was not prevalent when I was in school. I mean, there was encyclopedias, if you could remember that. And by the time you actually finished paying off the encyclopedias, if you grew up poor like I did, most of the things was out of date, to begin with. Today, the access to knowledge is just, the barrier for knowledge is non-existent. So you can Google anything today and find out whatever you need to learn. So I'm an advocate of being curious and going out and finding out whatever it is that you want to know. Because, with the internet, it is like the true democratizer of all social and economic levels to do whatever it is that they want across whatever continent, whatever industry, whatever age, race, creed, or color. Like, it really just knocks out the need for any social program, all that affirmative action, all that BS that has been, resident here in the United States. I just don't think that it's necessary. I know that this is a different type of show, but I don't want to get on that bandwagon. And
I don't know, Gena, to what degree it's genetic and to what degree your environment or whatever reason stimulates it. But I think those of us that are just insatiably curious have a huge advantage when you just love to learn and meet new people and learn new things and apply them. Boy, that's a major, that passion is really helps create a path to different successes of all kinds, monetary and non-monetary, I think. Yep,
I would agree.
Gena, we just have about 30 seconds left on this segment. Let me just ask you quickly, and we can continue to the next segment. What planted the seeds for real estate other than you thinking when you were homeless that having a piece of land would be useful?
I just wanted the income, right? I just thought about having the real estate and having, someone else paying me every month in order to use that asset, right? And I didn't look at it like as sophisticated as an asset at that time, but it was just the income. And I could go to a bank and get a loan, right, against it. I mean, there was really nothing else that I could do to go and get a loan from a bank.
Yep.
And
let's continue that after the break. We have Gena Lofton with us today, active investor, multiple asset classes, internationally recognized speaker, author, media expert, and conference contributor, and a podcaster herself. And we'll be back to ask her some more questions about what she's learned. Stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
I have Gena Lofton with us today, someone we've met through some real estate investment conferences over the years, and she is a author, podcaster, and a very successful investor and educator. Do you ever think you'd have that very positive complimentary label, Gena, educator?
Never in a million years, Tom. Just a little side note. And in foster care, I ran away when I was 15 years old and dropped out of high school. So I kind of laugh today because I'm a high school dropout. And I'm an educator, so it's kind of funny, to be quite honest with you. I mean, I did go back to school and have a, undergrad and MBA and things of that nature. But I'm still was at one time a high school dropout. So when I hear that I'm an educator, I just think it's kind of funny.
Well, and it's fun. I was just talking to my team yesterday about how if you want to teach, most people's concept is a traditional academic environment, right? And unfortunately, most teachers are poor. But you know, you can have a very active life in business and investing and you know, get on the correct side of the quadrant, which we'll talk about a little later. And you can still teach, right? Like you and I are enjoying doing.
Yeah, exactly. And I find that, you know, most teachers are, you know, the traditional teachers, they're academics, right? And they've never really done it. So I think that's why people like yourself and myself and those others that are truly have done this stuff should go out and give back. Because if you rely upon the academics to teach, the results are going to be bad. This is what you're seeing today. So it would behoove all of us, any of your listeners who are successful at doing whatever craft that they do, to give back, right, and to teach it. Because actually, by teaching it, you actually when I teach this stuff, because you're so used to just doing it. But when I teach it, I learn more because I have to explain it, right? So
sure. And then you're like, oh, well, wait a minute. I get back down to the fundamentals here. I got to teach it correctly. It's interesting. Yes, we had exactly. You know our marketing manager, Jennifer Zhang, and she's just such a important contributor and element and leader in our corporation. And she gave, she's millennial, and she gave a little presentation on some statistics and kind of concepts about millennial and investing and so forth at our recent Baycom.club, Baycom event. And after it was over, a lot of people came up and said, wow, most everything we've ever heard about millennials has come from a non-millennial. It was nice hearing from someone who's actually lived it, right? Exactly,
precisely. You have so many, you know, fake people, fake teachers or entertainers, and you got to get to the people who are really in that particular, you know, demographics or have done it before and lived it to provide that expertise. So kudos to Jennifer.
Okay, thank you. We've got about a minute in this segment. Let's start talking about your personal strategy for investing. What do you do, and what would you recommend others to do to go as they go about wanting to invest? Yep.
I look at it very simplistically. Find out what you're trying to accomplish, right? And then identify what is the best path for you to achieve that particular goal. So for me, that meant my whole objective was getting out of the rat race. And for me to do that, I needed X amount of dollars per month in passive income. So what would be the least path, the less amount of time, what investment strategy would give me that, you know, outcome in the least amount of time? And that for me was value-added real estate. So my recommendation is to align your investment philosophy with whatever your goal is that you are trying to achieve.
Yeah, it doesn't hurt to identify a goal before you before you go blindly wandering around hoping that maybe you find something and don't know if you found it because you never set a goal. We'll be back and continue that conversation in just a moment with you, Gena. So stay with us while we're chatting with Gena Lofton about her story of how she went from a nice Cinderella story by bootstrapping herself up. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Gena Lofton with us today, successful investor who loves the fact that you can get cheap debt in this country and that you've got can get passive income. So, Gena, you were starting to tell us a little bit about your recommendations and what you did for your direction in investing in real estate.
Yep, exactly. So, Tom, it was really this simple. If I needed $100,000 a year in passive income, I would need $1 million earning 10%, right? And literally it was a back of the envelope, exercise. $1 million earning 10%. Now, are we all in agreement that earns $100,000 per year? And I hope your listeners understand basic math, okay?
We're on board.
I had a dilemma. I didn't have $1 million, right?
Oh, little detail. Daggone.
Exactly. So I had a problem. I didn't have $1 million. And here's the other problem. It was very few investments that were offering 10%.
Sure.
Yeah, exactly.
But,
interest.
It was a starting point.
At
least you sketched out something that could work if you could figure out how to get there.
Right. Exactly. So it's kind of just working backwards. That was the goal, I needed to be out of the rat race. And that's really what my target was. And how am I going to get there? So I just had to work backwards. And I needed that in I had a time, 2 years, right? I needed to be out of the rat race. So I just worked backwards. That was the number. So I said, how am I going to achieve that particular goal? Since I didn't have $1 million and there was nothing that was earning 10%, believe it or not, it led me to only doing one type of investment, which would be value-added real estate. And what I mean by value-added real estate, I don't mean by putting lipstick on a pig. I mean buying a building, increasing the value of the building by the income in which it generates, going back to the bank and doing what's called a cash-out refinance. So I essentially was recycling the same dollar over and over again. And that is what enabled me to achieve the goal in a relatively short period of time because I understood money. That was key, and I hope your listeners really just take this thought in all the way, is that in 1971, Nixon took us off the gold standard, at which time money became debt. And I understood that. And fast forward to 2008, Hank Paulson went to Congress and asked for the $700 billion bailout. And they started printing money faster, right? So when Obama was in office, it was $10 trillion of debt. By the time Trump took over, it was $20 trillion of debt. So I knew I had to print as fast as them in order to stay afloat, but legally.
I love that paradigm thought. You got to run your press.
I mean, Tom, it was really that. It was, and I believe it today because Trump's got to go from 20 to 40 in half the time because there's more debt. So when I speak, I spoke at Freedom Fest on this, and to me and Peter Schiff and all these. I'm an economist, so this is what I do. So. It's still, the reason why the middle class is becoming extinct is because they are not utilizing debt. They keep saying the same thing, save your money and get out of debt. Instead, use debt to buy and build assets. I mean, if you think about it, I went from 2 units.
Gena, I'm sorry, we got to go for a break here. Let's continue that thought as soon as we get back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Gena Lofton with us today. Gena, so we're talking about having to print your own money as fast as the Feds are, and how. How do you do that?
Yeah, so how you do that is by the velocity of money. And so, as an example, as an investor, when I send $1 out the door in the morning, right, I wanted to come back by lunchtime with friends. And then I want all of those friends to stay after lunch, to stay in the house. And then the other one goes out $1, and it goes out and gets more friends, and by dinner brings more friends back with him or her. So it's about the velocity of money. How I do that, and I'll just translate that to real estate, is that I bought a building, I rehabbed it, and I wanted to get that money back fast and keep the building, because I'm not a flipper. I don't flip properties, but I get my money back with debt. So I go back to the bank, and then I do what's called a cash out refinance. And I need that time to be very, very short, right? Because it's the time value of money, right? So I need
now,
to get
Gena,
it
I would
back
think
because
Gena, I would think some of our listeners now are saying, that's great. Gena went out and bought a property, and she said she had one problem. She didn't have $1 million. So how do you buy a property when you don't have any money? How'd you start that?
I would either raise it from others and give them a piece of the deal, or I would find it some other place on my own balance sheet, or a combination of both, right? There's always money that's out there. It may not be your money, right, at the time. I mean, as an investor, I pretty much never have money. But if I want to invest, I will find the money. If you think about it, if most people were making 0% on their money today, or something, comparable, 1 or 2%, why not offer them a higher rate of return than they can get on that current investment that they're making, and have them be a part of the deal, give them 5%. But money, there's trillions of dollars of money that's out there. So I could either look at my own balance sheet to get it, right? I can go out and raise it. I mean, I get, credit card offers today for 0% for 18 months. That's a no-brainer. So let's just, translate that. Let's just say I borrow, $10,000 or $100,000, whatever that they will allow on a credit card, and buy 1,000 lollipops at 25% and sell them on a street corner for more. And build up the capital. There's so many ways in which money is free, Tom. It's been, and I want your listeners to understand this. If you haven't been able to make money with free money in the last 10 years, shame on you. You wasted a decade. We're in the 9th inning. Jamie Dimon said the other day that the 10-year note may go up to 5%. It's at 3 today, right? Barely hovering. It's 2.9. And that's gone up from 1.6 or 1.8 during the recession.
And it's all relative. It's still good.
Yeah, it's still good. It's still cheap, and it's been cheap. But you're in the 8th or 9th inning, so. The whole world has gotten extremely wealthy with free money, except for people, which I can't understand why. I mean, we sold DIRECTV for $48.5 billion. Why? Because AT&T went and raised the money. They issued bonds, to buy DIRECTV. Did the same thing to buy Time Warner. Amazon bought Whole Foods with debt, right? So why isn't everyone using debt to build wealth? Instead, they use debt to buy liabilities, such as a house, such as student loans, right, to education, such as cars, such as, vacations or boats or motorcycles or God knows what. Use debt to buy and build assets, right? If I could borrow at 0 or 1 or something less than whatever my return is, of whatever the widget is. I mean, I could do it with the digital business. I do it all day long with everything. I invest in oil and gas. I invest in digital, technology, real estate, blah, 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 blah. It doesn't really matter to me as long as what my cost of money is less than what the return of the investment is on the asset that I'm investing in. I don't really care.
Isn't crowdsourcing of equity wonderful? You and I have done a lot of business in which we've collected money from others to be able to buy real estate. We've given them much higher returns and other things they've had them parked in, and we all win. We are all able to leverage because we mix that equity with debt. And it's just so exciting what we're able to do.
Beautiful thing.
Yeah.
Absolutely. Absolutely. Yeah, everyone wins.
Indeed. We have about a minute left on this segment. Can you mention something about the quadrant? A lot of people have read Rich Dad, Poor Dad, but not all, and maybe not all didn't grasp that. So you're a big promoter of following that and moving over to the right side of the quadrant.
Yeah, absolutely. So just to explain the quadrant for your listeners, the book, The Cash Flow Quadrant, talks about the left side and the right side. So the left side is an E for an employee or S for self-employed small business owner, and the right side is B for business owner, I for an investor. The key that everyone should try to achieve is moving from the left side to the right side as fast as possible. And here are some of the reasons. One is, on the left side of the quadrant, you're paying 50% or more of your income is going to pay taxes versus 0 to 20 on the right side of the quadrant. So if you could think about it, would you rather make $100,000 a year and paying 50% of your money in taxes, or make $100,000 a year and pay 0 to 20? I chose the latter. So the reason why you need to move to the right side of the quadrant as fast as possible is that that's where 95% of the wealth is actually controlled, yet only 5% of the population are on that side. And on the left side, you have 95% of the people that control 5% of the wealth.
And indeed, those of us that are on the in high tax states, it's even more important. So we'll wrap up with a couple of those thoughts here on our final segment. Stay with us with Gena Lofton. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
So, Gena, continue with your education and thoughts about the quadrant.
Yep. So because of taxes, they are your largest expenditure if you think about it. It doesn't make sense to go out and try to, save money on a gallon of milk and, whatever bread and toilet paper. It really makes sense to try to reduce that largest expense, even more so today than ever, just because of tax reform. So those of us who live in, let's just say, the highest income tax states such as California, New York, New Jersey, Connecticut, Maryland, D.C., et cetera, the recent passage of the tax reform bill, what it did with the state and local income taxes, it reduced it to only being able to allow those that live in those across the U.S. to deduct $10,000. Well, and that's for state and local as well as property taxes. So it's going to become more and more important for everyone who especially lives in those high income tax states to move to the right side of the quadrant as fast as possible, because before you were probably able to deduct, let's just say your total state and local income taxes was $50,000. Well, going forward, it's going to be less. It'll be $10,000 total. So you're going to lose potentially $40,000, obviously, depending on your income tax bracket and, deductions and things of that nature. So if you don't understand this and be able to use the tax code by investing in what I call passive income generators, such as real estate, such as oil and gas, such as digital businesses, ATM machines. I mean, there's so many different, the tax code, what I didn't understand until I began to build my team is that it's just a book of incentives to do what the government wants us to do, and that's to provide jobs and housing. So my recommendation to all of your listeners is to really understand how they're earning their income, take advantage of the tax code, and move to the right side of the quadrant. And there is a free complimentary masterclass on my website. If for those of you who want to know how to do it, just go to www.Gena, Lofton.com and take the complimentary masterclass and learn how you can move from the left side of the quadrant to the right side as fast as possible. And it doesn't really matter what state you live in.
Thank you, Gena, so much. It's been wonderful having you on. Gena Lofton with us today, active investor across multiple asset classes, and an educator, and someone that we'd love to have back on the program. So, Gena, thanks for being with us. I'd like to remind everyone to go to TomWilsonProperties.com, where you can sign up for our weekly newsletter on real estate and economics. Also gives you access to our syndications, our commercial syndication, multifamily syndications, where if you have access to those, you can increase your returns, usually $50,000 a share for properties from $5 to $55 million. And on TomWilsonProperties.com, you got all the podcasts that are that we have from the past 6 years with folks like Gena, Dr. Doug Duncan, Chief Economist Fannie Mae, Robert Kiyosaki, and so forth. And make sure you tune in, and we look forward to having you on our next listen in on our next broadcast. So remember, the only thing that matters is what you do next.